What is up, everyone? Hello, and welcome to another episode of the Bearded Men of Real Estate Show. And this week in real estate has been a little bit crazy. We're going to be talking about these news articles that have all hit with the increased inventory. Everyone thinks that the world is going to end. So we're going to be talking about that, and if we're going to actually return to a normal market or not. We're talking about the NewRona, hashtag NewRona, and what's happening to mortgage rates. We're talking about home prices. Inman being acquired by somebody. We got Zillow news in Wisconsin for sale by owners. Is there a conflict there? But before we get into that, Dan, will you say hi to everybody?
Hi, Dan. I don't know. I don't think that's how we usually do it.
Welcome to the show. I decided to make it. Well, they say that you have like 3 seconds to hook someone. So if I use those 3 seconds just to like introduce ourselves, then we might miss that. So I'm trying to hook you into watching this whole thing because we think this is important stuff to know. If you're joining us live on YouTube, you can comment, you can text. Mario Flores, he says, "What up, Ray and Dan?" Hey, Mario. Melissa Mara says, "Hey, hey, hey, hey." Thanks, Melissa. We do have a back channel called the Bearded Men of Real Estate Contributors Group. So it's called BMORE Contributors. I should post the link there too. If you're watching us on Facebook, please share the show there. You can also comment on Facebook instead of lurking like we see that you're doing. Matthew Clinton, producer Matt's there. He says Roner got a software update.
Yeah, this is. Yeah. Did they go? Is this 1.1 or 2.0?
I think this is 1.2, right? Maybe. Adam Johnson's joining us. He says Ray, Dan.
No, read that how he wrote it.
Oh, Ray, Dan.
Yeah.
Yeah, there it is. Thanks, everybody, for joining us. You can join us on YouTube. You can join us on Facebook. I didn't mention that you could also join us on Clubhouse. And if you're in the Clubhouse group, we broadcast this show in the Real Estate Networking Club. There's a little greenhouse at the top. Just hit that button and be sure you follow the club. That way you're notified of this and other great I almost said broadcast. I guess it is kind of like a Clubhouse broadcast at times, but sometimes it's like a group mastermind meeting. One of my favorites is a high-level mastermind that Matt LaMarche does. Another one, Justin, our friend, he was actually on the show a couple of weeks ago. He does one called Practical and Tactical. I think that's either Monday or Tuesday morning. I think it's Monday morning, so I get my days confused. But if you want to be notified of those, be sure that you follow the club. If you're following us on YouTube, you can follow us and hit the bell, and you'll be notified of all this stuff. If you hate banter, then you could go down, if you're watching the replay, you can go down to the description. I mean, we just got all this stuff for people. I got to run through it. And you can click on each one of the articles. There's a little timestamp there, and you can just fast forward past all the banter. I do have some good reviews. So we got some reviews on the podcast. We're also a podcast. So you can find it in your favorite podcatcher and be sure to review it. But I'm going to be posting some of those reviews and thanking y'all that already reviewed it. We really appreciate that. It means a lot to us. And it also helps get this information out there because I know we have a lot to cover. But Dan, would you tell people like why we actually do this show and it's all about?
You know what? I would love to. Now, when Ray and I met here on the interwebs 482 years ago.
It was a while.
It's been a long time. We've known each other. We go way, way back. We can say that now. Now,
I just want to shout out Jesse Ramirez just subscribed to the show. Thank you, Jesse, for subscribing. I just saw that.
Nice. Is he the one with on Clubhouse with the glasses as his profile pic on Clubhouse?
Let's find.
That's cool. It's a cool pic. Whichever Jesse that is, that's a cool pic.
That's pretty great.
Yeah.
All right.
But anyway,
sorry, Dan, I interrupted.
That's okay. I mean, Dan Mack is here for the banter.
Yeah, Dan Mack. That's why he watches the show.
Ray and I are specifically here for the banter. We just happen to give you great news updates as well in real estate. But anyway, when I met Ray all those years ago, those many years ago, I had an idea for a show because I'm in fact a bearded man of real estate. And when I met Ray, I noticed something very interesting about him.
Really? What?
He already knew that today is Norm's birthday.
Happy birthday, Norm! Yay!
Yeah.
That's so great.
I'm not going to say how old Norm is, but he was around when they invented dirt. So everyone.
We're getting. Nico says, "Happy birthday, Norm." We're getting some birthday wishes there. I appreciate it, guys.
Yeah. You don't need to know Norm to know Norm.
Yeah. If you know Dan, you know a little bit about Norm.
Yeah.
You want to tell people who Norm is? Or you just
Norm's my father.
There you go.
Yeah.
Who watches the show faithfully every week and lurks.
Yeah, and he's the only lurker that we're okay with. Everyone else, if you're lurking, you got to comment or join us on Clubhouse or YouTube or whatever. But yes, it is my father. But okay, obviously he knew Norm's birthday. Everyone knows Norm's birthday, so everyone say happy birthday to Norm. But what I also noticed about Ray is he loves giving value to not only his clients, but just to humans in general. So the show's about being more as an agent, but also being more as a human.
Yeah, and one of the ways we believe it's important to be more is to know what in the world is going on. Because how can you consult with your clients with their largest real estate investment if you have no idea what's happening in the marketplace, not only locally, but also nationally? So that's why we do the show. Dan and I were already talking about this stuff kind of in the back channel. Then we thought, hey, we should probably produce this as a show publicly because the discussions we're having are really interesting, and hopefully other people would hear this and add to the discussion, which is why we're open on like almost every platform except Instagram. We got to figure out how to go live on Instagram too, but we're live on almost every platform and can display your comments, and we can keep you in the show. So Melissa Marr says Norm creeps, and then there he is. He says 10-4. Or is that 104 Norm's age? No, just
possibly. Before we get back to it, but yes, I made Norm grow a beard about 4 or 5 years ago. I made him one because I had I've had this thing for 15 or 16 years. And so I made him grow one, and because he has shaved faithfully once or twice a day since I've been alive. So 47, 48 years. Always.
He's a 2-a-day shaver.
Yeah.
Wow.
Yeah. Well, so the reason being, because he was a police officer, a detective for a long time. So he'd wake up, he'd have his routine, he'd shave. Always clean shaven. Would rarely ever see, unless we went on vacation, rarely ever see stubble on the man. So I made him grow out a beard. Dude, it's legit. He can grow a sick beard, a really, really good beard. I've seen it once. I don't think we got any pictures of it, but the memory's up here, and it's legit. He let it go for a month or so, and it got pretty amazing. It was pretty intense. So I'm hoping that one day he just says, screw it, I'm growing the beard out. We'll see.
So there's like two types I don't know how many of our audience care about this. There's like two types of beard. There's one that like is kind of like ours, that's just kind of normal beard hair. But then there's some guys, specifically Irish guys is where I've seen it most often. They grow beards that look like hair. It's like wavy like hair and softer.
Yeah.
Is he one of those guys, or is he more like me and you?
No, he's more like us, but it's not hair. And I know exactly what you're talking about, dude. Back in the day, so this is I was in real estate, so it's about 10 years ago when I still worked and lived closer to Long Beach. There was a dude at a coffee, tea, and bean leaf, or coffee, bean, and tea leaf, whatever it's called. And this guy had the full head of hair coming out of his face, and it was like immense. And he triple braided it. It looked like a Lord of the Rings character. It was amazing.
All right. Matthew Clinton says we need Detective Norm TV show.
We do.
That's what I said. I want Detective Norm stories. Yes. Mario
says
dude,
he only grows they're amazing.
You'll get it. You'll get it. Just keep watching the show. Matt Farrell checking in. What's up, Matt? Thanks for joining us. He's a new agent, by the way. Matthew Clinton, he says, my beard looks like I grew one in and then let a blind toddler shave it. All right. Well, speaking of close calls,
we are really hooking him up on the banter.
Yeah. Somebody, I think it was Matt Lamar. She gave us a review and said perfect amount of banter. So there you go. All right, let's do this, man. Let's get in there.
So we're pushing that today is what we're doing.
We're pushing the limits. There you go. Tom Tezak from Hawaii says aloha beards. Hey, Tom.
Maui, right? I think he's Maui, right?
He is Maui. Yeah. All right. So housing boom. Is this thing over, or is this clickbaity headlines? All right. So we want some honest opinions, because, a lot of times we look at it and say, no, that's just clickbait. But is it?
What? Our thumbnail is amazing today. I haven't looked at it.
You hadn't seen it?
No.
Yeah, the thumbnail is right, man. It looks good.
So good.
All right. Speaking of popping the housing bubble, you got to check out our thumbnail there. All right. Sales of newly built homes dropped to the lowest level since the early days of the old Rona pandy in April of 2020.
Yeah,
we're talking Rona 1.0. We don't want our show to be suppressed All right. So sales of new single family homes fell to an annualized rate of 6.6, below May's rate of 724,000. So that was 19.4% below June. And analysts were expecting new home sales to increase 3.4% in June. So this is a pretty big swing. After a year of frenzied buying and price gains in the double digits, newly built homes are now out of reach for much of the demand that remains in the market. The median price of a newly built home in June rose 6% from June 2020. And while that is a large gain historically, it's nothing compared with the 15 to 20% annual gains seen in the previous months. So the prices of newly built homes are going up and away. Peter Buckvar, he's a chief investment officer for Bleakley Advisory Group, said this: We also know that there's a shortage of appliances, labor, and affordable lots, which we talked about a lot last week. The moderation in home sales is likely a combination of sticker shock and the slowdown in the ability of builders to finish homes because of the variety of delays. We even talked like a month and a half ago about you remember the paint shortage? That has impacted sales here.
Paint, appliances, furniture, all of it.
Yep. Zillow economist Matthew Speakman said in a release that annual comparisons will get even more difficult in the coming months, as it was this time last year that the market began to surge and reach heights not seen before the Great Recession. So they're kind of talking about this outlook. Be cautious as you see numbers coming up. The inventory home for sale jumped to 5.5 month supply in May to a 6.3 month supply in June. Last fall, it set at 3.5 months. So there is more supply. However, the new home sales are down. We're shifting our tone on the housing market based on our analyst of proprietary data showing early signs of a cool down. So is it actually a cool down? There's another story on housing supply. New home sales down 6.6 year over year as builders manage construction pipelines. New home sales, what happened this month? Let me get to some of these stats. It's some of the same stats in the Realtor.com article, but just seeing the headline again, new home sales are down 6.6%. Existing homes are scarce, and basically new homes are not even an option for a lot of people. I've got I got two more articles on this. Let me cover these next two, Dan, and then I'll get your comments. This one's from Fortune. We're just going to read part of it because the rest of it's behind a paywall. A crash in the housing market seemed inevitable during the early weeks of the Rona recession. However, that bust didn't come to fruition. In fact, the opposite happened, which we all know. Combination of government support. Was it? Recession included low interest rates and eager home buyers set off a housing boom. Since the onset of the crisis, the median home prices are a staggering 24% higher. Much of the government aid and support is about to go away. I guess they're talking about the relief for the people that were in forbearance, right?
Forbearance mainly, and then, obviously, then the stimulus they had out there for unemployment.
Foreclosure crisis following 2008 was so bad in part because of the tens of millions financially strained homeowners that were underwater. That's unlikely to be the case for the financially strapped homeowners this year. The homeowners are likely sitting on a sizable home equity. So could this mean that they list it? And is an increase in inventory the sign of a housing market that's losing steam or not? This is the last article. Then I want to get some discussion and feedback. This is from Housing Wire. The housing market is losing steam. 66,000 new home sales in June, down from 68,000 in May. Mortgage applications for new home purchases decreased 3% and 23.8% year over year, suggesting a slowdown in the housing market, according to a recent report from the Mortgage Bankers Association. New single-family homes were reported to seasonally be adjusted annual rate of 704 units, a decrease of 5% from May's pace. The Mortgage Bankers Association estimates that there were 660,000 new homes. We already said that. Overall sales of new homes were still down 7% from last year, according to Joel Kahn.
God.
He's the Mortgage Bankers Associate Vice President of Economic Industry Forecasting. All right, let me get to a couple of quotes of him, and then we'll have a discussion here. He said, last year was the strongest year in housing market for new home sales in over a decade. Right now, home builders are encouraging stronger headwinds as severe price increases for key building materials, rising regulatory costs, and labor shortages impact their ability to raise production. This has dampened the new home sales and quickened home price growth. All right, so you guys can read more about that. Those were 4 articles, one from CNBC, one from Realtor Magazine or Realtor.com, one from Fortune, and one from Housing Wire, all saying that the housing market appears to be losing steam.
So the Fortune one, before I got hit by the paywall, I was able to read the article. So you ever see that? Like it gives you like
like a day
one free, you can read through it and then you go away from the article. I literally sent it to the guys in our little production thread, and then I was saving for later. Then I came back to it and I went, oh, dang it, now I'm behind a paywall. But so it says a lot about, it tries to compare, and it's not a forbearance crash bro thing at all.
Right.
It says a lot about it's trying to compare 2008 with now and what could happen. So what it does say is actually says if there are any homeowners that are underwater, coming out of this forbearance and cannot afford their mortgages, they won't be underwater. They'll be fine. And either they can sell as a standard sale, and then still have equity and then go and rent because they're, but they went through all the equity numbers that we have and stuff. So I don't see how, if that happens, obviously we won't have a crash. We've been talking that forever, but I don't see how that couldn't only help the market, but it hasn't happened yet. So it's a lot of if, and we see all this. And I think Julie Moon's comment is the best. They keep saying losing steam, or are we about to crash, or are we about to burst the bubble, pop the balloon, whatever. But she says losing steam. So instead of going 200 miles an hour, housing sales are only at 185 miles an hour. Cool. Which my newest listing experienced the same thing. We didn't get as many showings as we would have 6-8 months ago, but we still ended up with 13, 14 offers. Yeah.
T. Jones says, I've seen open house lines not as long these days.
Exactly. It's like
there was a time period where there were no open house lines. You don't remember that?
There were no open houses. Yeah, there was a few people in, people out. So I just think it's really interesting in reading all these, and I'm a little bit irked by it because it seems like all of the news channels lately in this last week are looking for some sort of incendiary clickbaity headline to get out there and to get people to click. Because when you read it, all I'm seeing is losing steam because new construction. But over the last however long have we been talking about new construction is struggling? Yes, they're up, but they're struggling because of lumber. They can't get supplies. They can't find any land. They can't find any labor. But now all of a sudden, new construction's at a 5 blah blah month supply. So that's going to save and chill our crazy housing market. And then they mentioned, existing home data is at 2.6 month supply.
Yeah.
So it's interesting to me. It's kind of irking me. It's kind of irking me this week to read through all these stories because we have a bunch of them, and it just seems like they're scraping for something. Even people that I really trust and really go to for some news, seems like they're reaching right now. It really does.
Mike Elizabeth Riddell said only spent $5 yesterday on a nice 1x2x8 instead of $8, so it was a good day.
Yeah.
She goes on to say, I think you have agents treating it like a crash. I had an agent insist that our home was priced $10K lower than appraisal was overpriced for the current market conditions. I tried to explain that while things were slowing, they sure as heck haven't gone backwards.
Yeah, I had an agent
really
reach
funny
out.
about the time that the agents seem to know, like, oh, I need to price this normal and it will still probably sell above market. Now they're saying, ooh, we got to be careful. We can't sell above market anymore. And they're like rushing to take lower offers, which has really been interesting. Ryan Bokros says data manipulated for nationwide. Unfortunately, nothing new. Data manipulated for narrative. Unfortunately, it's nothing new.
Right. Yeah, but this one is so apparent and so blatant. It's insane.
I think honestly, it might be a slow news week for them. So if they can see an increase in inventory and then hop that as like, oh my gosh, an increase in inventory, the housing market's going down, seller home price gains will slow.
Yeah.
That's not a bad thing for all the buyers that are sitting in the market, sitting on the fences, just waiting for new inventory to hit. Suddenly you have new inventory to hit. It seems like you're going to have more closings. And because we know economics, supply and demand, right? If there is more supply, then the prices are going to stabilize. They have to, because that is supply and demand. But it is funny when I have like one of my clients or a friend of mine, they're like, oh, it must be great to be a real estate agent these days. I mean, how many of you guys have heard that, right? Must be great to be an agent these days. And I'm like, well, it's always been great, really. And they kind of look at me funny. I'm like, well, you remember when it was a buyer's market? Back when it was a buyer's market, I was helping buyers, and you guys were like, oh, it must be great to be a real estate agent these days. So it's like, well, like on one side or the other, it's always going to be tough. Nico, he had a good comment. He said the only lines are from the agents letting only one person in at a time. That line is maybe two people. We have seen that with the resurgence of NewRona, which Julie Moon coined it. So thank you, Julie, who's in the Clubhouse, by the way. So I appreciate you being here. Adam Johnson, he says, I've noticed that I still need to price below market to get multiple offers. Many agents start listings and new listings at what they think they will sell for. And now I see price reduced. Yes, I've also seen this. I price at my low list range and things have been good. Buyers will still expect to buy over price. So if you price at market value, you may not get an offer in my market. Yeah, that's the same thing we're seeing too. And I do 3 different types of analysis, which I've talked about on the show before. We do a comparative market analysis that tells people a range that the price should sell for based on the other solds. We do a competitive listing analysis that tells people like, okay, if it can sell in this range, here's how it compares against the other options buyers have to choose from. And then we will do an absorption rate analysis that tells us the speed at which homes are selling. And I did an absorption rate analysis last week on a home, and in January it had 13 sales, February was 15, March 17, May was 18, June was like 22, and then July was still sitting at 16. So it looked like the absorption was like going, and based on what was pending and under contract, they're probably going to have more than 22. They'll be sitting like 25 closings in July. So that tells us that the absorption rate hasn't slowed down, that as much inventory as hits the market, that's what's being sold. So there are still more buyers looking for homes than there are listings available. So I think if you do those 3 different types of analyses, you'll be able to price towards the top, or you can recognize the slowdown in that absorption rate and start to price towards the middle and maybe even towards the bottom of that range to benefit your client. Lisa Perk said, people always got to move. Yeah, very true. Dusty said, OMG, I literally have this convo daily. Yes. Nico says listing at what I think it will go for is just stupid. Yeah. We listed one last week. I told my clients it might sell, about $20,000 higher than what I told them to list at. And that's exactly what it sold for. So sometimes you can peg it. It feels really good. I know you guys know that they're real estate agents. It feels good when you can like, bam, peg it right on the nose.
Well, and it's fun to be able to say, because my newest listing, the sellers, happily listened to me, and we ended up. So there's a difference between, and I think I've said this forever, but not just because of the crazy market, but list it below. If your sellers listen to you, I listed it below where I think it would actually sell for, and then it usually ends up where you think it'll sell for because the market's going to correct itself. But yeah, listing it where you think it's going to close for is going to miss pretty much every time. I don't care how hot the market is. And this listing specifically is pretty rough. It needs a lot of love. So we wanted to get it. But I did have an agent, I guess I'll call him. I think he's an agent. He reached out to me and he said, hey, so my clients have been looking at comps and they say the house is worth $325. Are your clients motivated? Are they like actually going to sell? Will they take 320, 325? And I said, your clients looked at comps or you looked at comps? And he said, well, I haven't looked at any comps yet. And I said, all right, well, our conversation's done then. We don't need to have any, I don't need to talk to you at all.
That's funny.
Yeah, that was.
Let the clients do the work for you.
Yeah, I tried to explain to him that he's the real estate professional and he should guide his clients, but apparently he likes it the other way.
All right, so I want to bring in a couple of folks. Does anyone in Clubhouse want to mention kind of what's going on in their market? I'll bring you guys up to the. I don't see anyone in particular. I know. Oh, there's Scotty. All right, Scotty. I saw you flash your mic. What's going on in your market? Are you seeing a slowdown? Tell us what market you're in.
Sure. I'm in the New York City market, mostly Manhattan and parts of Brooklyn. So it's certainly extremely interesting to watch the real estate market nationwide over the last year and a half. Our market turned on a dime somewhere around March, April, where we were really struggling, and now we're competing with inventory that is just ridiculously low right now. I agree with your analysis on the stories that are just looking for some sort of sensational headline, because honestly, here, for good apartments, just like anywhere else, for good places that are priced, fairly reasonably, we are getting, a dozen offers on each property. And then there's some areas here in New York where, it's a struggle to sell places. So right now the market is pretty hot. We're starting to settle into more of a kind of regular crazy market, because it's always crazy here, but we're starting to settle into something regular where the prices are actually starting to come back to where they were back in 2019, because we did take a hit for quite a while. So it's been interesting to see, but more interesting to hear what's going on across America. And I guess one of my questions for people out there in markets that have been really hot is, I've seen, the data of the prices going up anywhere from, let's say, 20 to 40% in 1 year. I would imagine, if once the data is really out there, in real estate stories over the next few months, that buyers are going to not want to buy into that exuberance and just pull back, and maybe that will, soften the real estate market a little bit, but it'll still be quite strong. And I'm wondering what everybody thinks about that, because I read in Houston, in certain areas, Houston, Austin, that some prices were up 43% over a year ago, and that to me is frightening as a real estate agent who represents both buyers and sellers. Seems great for the sellers, but for buyers, I don't know if I'd want to buy into that. But I will yield, but I'm curious to hear.
Yeah, let's investigate that a little bit. So you're nervous because you hear that in some parts of the U.S. the home prices are way up. It depends on who the buyer is. So this is kind of my take on it, and this is what I talk about with my clients. Are they an investor, or are they looking for somewhere to spend 5 to 10% of their life? In most cases, they're not an investor. Although they want to make a wise investment, they're actually looking for somewhere to live. They want a place to raise their kids, or they want to downsize. They want a place for their kids to come home for Christmas. They're moving because of work. And so I generally ask them the question, do you want to find a place that can get you a better deal, right? Because you're moving. So do you want to try to find a place that you could get a better deal at and pay less for, but not enjoy as much? Or do you want to pay at or above market price for something that you're going to spend 5 to 10 years in? And most of the time the buyers are like, yeah, I'm willing to pay more for what I want. And I think that is I think that's probably like 70 to 80%. This is the Ray stat, right? It's 70, 80% of most home buyers are in that position. Occasionally I'll have someone that's like, no, I got to move sooner than that, in which the decision's different and the decision-making process is different. If they want to buy something and then move in 2 years, they may have to put up with the cat pee smell initially until they can get that out of there. They may have to change out the green shag carpet. Those are the things that they can do, but materials cost is up too, so those remodels aren't as easy. I also have a lot of clients that would like newer homes, now buying a home and then doing a remodel, a construction remodel. It's not the ideal house for them, but it's the one they wanted, and they can make it ideal for them, maybe by removing a wall or doing some work on the property. So I think in those markets in which you see a 40% increase in home price year over year, there's a lot going on in that, but there's also a lot that's rationalizing that purchase on the buyer side. And it's not generally I'm making a good investment in order to sell in a year or two. I think it's the life they want to live and where they want to be. And as long as agents, we can recognize what their actual motivation is, you can consult with them and help them know that, yeah, this is going to be a high price, but hopefully the continued appreciation from that area and that marketplace will continue to go up. So hopefully they'll still experience the 3%, nationwide average appreciation, or 6% appreciation in some other major markets. And if they do that and they're paying more for it, then they should still be okay in the future. Does that kind of answer your question of what's happening in the other markets and how we're consulting with them, Scotty? Or that's just me. I'm
Yeah.
looking at what other people.
No. I mean, it's super helpful because a lot of who I deal with and a lot of what I deal with is super niche because we're dealing with cooperatives and cooperatives specifically do not allow investor units. So it is very interesting. So I think you're right because I always tell my clients, I say, look, the price is the price, but if you're going to be here, for 5-7 years, then you're all set. You're going to be fine.
Yeah, good point. Good take. Nico, I saw you flash your mic. What's up, man?
Good afternoon, salutations, fellas. So I've been no stranger to this conversation for the last, I don't know, I guess 6 weeks ago, I guess, with your shows. So I did mention to you how where I am, and just to kind of reiterate where I am. I'm in North Jersey, right outside the George Washington Bridge. So basically from the Holland Lincoln Tunnel all the way to the George Washington Bridge, right? So I mentioned Bergen County, which is right outside of George Washington. The northern part of Bergen County started slowing down, but the southern mid part of Bergen County was still pretty hot. So I got a listing in that area that was super hot, and I'm already a week on. I'm on a week on the market, really low priced. Um, and during the open house this past weekend, I probably had maybe a total of 7 people in the 2 days, and I've had maybe 4 showing requests since. So the market there is already starting to slow down, and I have 3 more listings coming this week within the next town or two, which I don't expect to be any busier than this one here.
That's good, man. I mean, I think a guy like you in a market like that, recognizing the shifting, because you've been talking about this shift in your market for a while, and how it's totally different from one part to the other. So that's pretty cool. I love your take on that. Let's see. Do we have anyone else that wants to comment of what's going on in their market specifically? Deborah, I see you flashing your mic. What's going on in your market?
Hi. So I'm in Sacramento, California, and it's very important to know what's going on in the United States, but you really have to get down to what's going on in your market and understanding the nuances of where you work and how it applies to that. So Sacramento is fed by 2 pieces. One is Sacramento County actually feeds El Dorado County and Placer County for people that want to stay here. Because there are more retirement options in the Placer County area and there's more luxury options in El Dorado County. And because of that, the Bay Area fed us heartily this year as offices decided that you didn't have to come in anymore. We are up significantly. Well, our prices are up 25% overall, which is big for this area. Our feed from the Bay Area is almost half, maybe 50%. Specifically, Bay Area people request to go to El Dorado Hills. They request to go to Granite Bay, which is another luxury area. And then the rest are all retirement people. And we have an enormous retirement community in Roseville and Lincoln, which is only getting larger because we have new builds going up by 2 other builders that are in the process now trying to capitalize on this. Roseville being one of the top 10 places to retire. In fact, maybe the only one left in California because it's so damned expensive here. So with that in mind, a lot of my business came from the Bay Area because that's where I came from. So I got a lot of referral business. They continue to come up here. They pay cash for everything because they sold their houses for way over asking. And they came up here and they made offers for way over asking and paid cash. And that's my market. Now, what happened to that market? Well, retirement went completely flat a month ago because there's lots of reasons. It happens up here every year. People are out of school. Grandparents like to spend time with their kids before they go back. Retirement always drops off here. And, I had a lot of success there this year. And unfortunately, driving up the prices in senior is really hard on seniors who come in at the lower end because they now can't afford to come in.
That's a good point.
Yeah. So I really domino affected the lower end and have a very mixed ambivalent feeling about that. On my luxury clients, the number here that is specific to this area is 2 million, is the point where people hang out and wait for the prices to drop. And what I've noticed is that a price drop in this market is 2 weeks in, then they drop it $200,000 down to 1.8 or 1.9 or somewhere near 2, and then a feeding frenzy. And it's all Bay Area people. They've been waiting for the drop. These are views. These are, in the Bay Area, this house would sell for $5 million or more. And $2 million, it's amazing what you can get here comparatively. So folks hang on and wait, and then you have a feeding frenzy. So in our market, and I think this is probably true in certain markets like California, you have pockets of hot, you have pockets of complete slowdown, you have pockets of buyers are starting to actually be able to make offers on properties and get them. There's not quite as much multiple offering going on, but we're still pretty strong in terms of, ironically, a month ago, we got a lot more listings and our buyers are exhausted. So it's sort of leveling out for that reason. That's very different than it may be in other markets. Right?
Well, and I was just going to say, I mean, that's a great note on knowing your market specifically as a real estate professional. You've got to see what's going on. She's talking about these different pockets that are happening in her market. You could tell she knows it because she's talking about the price points at which people are waiting. She's talking about where price drops happen. And one of the things that may provide some of those buyers relief will be the foreign investment. So we have another article kind of built into here that talks about the foreign home buyers are putting less stock in the U.S. real estate market. It's really just some information from magazine.realtor. And I know the second home places, there's a variety of communities that they were initially investing in. Well, on the let's see, overall international buyers made up 2.8% of the 5.8 trillion in existing home sales. So it looks like, let's see, that was foreign buyers who lived abroad purchased 22 billion worth of existing home sales during that period, which is down 33% from a year prior. So the foreign investment may be providing relief for a lot of those people who are buying around in the top destinations, which is, kind of why I'm bringing it up on the back of Deborah's information there. The top locations were California, which is 16% of the investment. Texas is 9% of the investment. Arizona is 5%. New Jersey's 4%. New York's 4%. So the higher home prices may be what is driving out some of those foreign investment, but it could lead to some relief for our buyers who, like she said, are just kind of waiting to see what's going to happen, and hopefully will provide some relief for that second home market as well.
Yeah. Did you get to Tom's comment above?
I know. I was just going to bring that up. So Tom said, resort markets have been affected by 1031 sales. Lots of anxious money coming in that it needs to spend. So
that's great news.
Exchange,
because remember, he was really hit by the Rona hard when we were. He was on the show and then it hit, and he was always like, it's kind of died. There's nothing much going on. So that's good news, but it's like anxious money, which is crazy.
Yeah. Okay. So I think that was all the commenters that we have on the Clubhouse. Melissa Mars said the majority. Oh, hey, doggy. Hi, doggy. The majority of price reductions I'm seeing on daily are homes that when they were first listed, I thought they were crazy and overreaching to begin with. Some are getting slapped back into reality. Yeah, some people are just kind of vaulting their home up onto the market to see what it could bear. See, Martin, she's in Arizona. She says the market here has been has been a complete grab bag. Some parts of Arizona will be stable market by next month if things keep up like they are over the last 4 to 6 weeks. Other places won't even out for another 13 months if they're showing and absorption rates keep up. It comes down to the desirability of the area. Oh, Tom brings up a great point. We have several Canadians in here that watch the show too, but he said when Canadians can travel freely again, I believe warm result markets will explode. Very true. Okay, so we have a voice of reason, kind of.
No.
Logan, no, you said.
Well, I just before we go to move on to Logan, because by the way, I'm going to disagree with that guy, but for the longest time at the beginning of my career, and I've been doing this 10 years, so 2011 and 12 and 13, when the market kind of figured itself out, it was all like we had to battle a lot of cash from foreign investors, a lot of cash here in California. And I don't know any numbers or percentages on it, but it seems like, we were always losing it. Oh, there's another all cash offer, which is happening now, obviously, but it was. So I think that does provide a lot of relief. And also when prices are up like they are, foreign investors aren't going to look to invest as much, but I think it's providing some relief for quote unquote normal buyers.
Okay. So let's take a look at the normal market stuff. This is from Housing Wire. Logan, who's been on the show in the past, he said in the last few months in my articles for Housing Wire, I've written that monthly supply has been rising and that the increasing supply was the most critical metric for the housing market, specifically with the new home sales market. According to recent census report, 3-month average is now 5.53 months, which we talked about earlier. A rule of thumb always with 3-month average, 4.3 months and below is a good market for the builders. 4.4 to 6.4 months is an okay market for the builders and will build as long as the new home sales are growing. 6.5 months and above, and the builders will pull back on construction. So here locally, when I talk to builders, we look at a 2-month number. If we see 2 months of supply, builders have trouble keeping up with the supply, kind of going an extra step to what Logan's saying there too.
So that 2 month is the lower end.
Yeah, if you get 2 months of supply, builders are having trouble putting out enough product to satisfy.
Because it's going so quickly.
Which is a sign that the retail houses, the regular homes for sale, will start to tick up in purchase price because people can't find what they need. So if you're in the market, talk to enough builders and figure out what's going on. Investigate their experience at all these different months. That way you can tell in the future what's going to happen for purchase prices. Let's see, from the census, 6.3 months in the housing market at the current rate. Oh, I'm sorry. Wait, the seasonally adjusted estimate of new houses for sale at the end of June was 353,000. It represents supply of 6.3 months in the housing market. Interesting. This means we're back to normal inventory levels in a normal housing market. The payback for builders may be coming to a close. The builders may have been taking advantage of the low inventory to make as much money as possible by padding their margins. Even with lumber prices rising, their customers had no choice but to pay the upcharges. In the previous expansion, 08 to 19, the builders didn't have that kind of pricing power. But from 20 to 2021, when the existing home inventory collapsed, the builders had a captive market. People needed shelter and they were willing to pay up. So basically what he's saying is that the home buyers may not be willing to pay as much as they were because the inventory increase in new homes.
And that one you're reading is from the 22nd, right? Because there's two.
This is the July 26th one.
Okay. So there's two parts. There's the 22nd one and then the 26th one. The 26th one he covers. That's the one where he says the 4.3. He says the range, the 3 different ranges where
that's
builders used to pull back. Yeah, and he covers a lot of new home data. New home
sales. Well, he's using the new home sales as a barometer, a metric for the market as a whole.
Right?
Can that be done? I guess it could be. He's an economist.
The dude knows numbers, knows housing numbers. The dude knows housing numbers better than any of us, right?
Yeah.
You're good. Say hi.
Hi.
Now everyone say bye, Jordan.
Bye.
The dude knows housing numbers better than anyone. He's always every single article he puts is just juiced with numbers. but this one is it's a lot of, he's putting a lot of weight, in my opinion, on new construction. And yes, inventory levels are up, but can they sustain this? And are they really keeping up? Because they've been holding back and holding back and holding back, and it's going to be really tough. Like waiting for existing homes or resale homes to come on the market, that at any moment can go up quickly, because all of a sudden, if 1 million people decide to sell, oh my gosh, we have too much inventory.
Yeah.
But you can't all of a sudden have 1 million homes built. You know what I'm saying? Like,
yeah.
So I think he's putting a lot of weight on that one, and then kind of mentions it. Oh, and existing home sales are at 2.6%. So, that's kind of a big deal too. But anyway, back to new construction. So
so his conclusion is that for the future, I expect to see the price growth for the new home sales to cool. So this is the exact headline that we said to look for, right? Home price gain slow. This would be converted to new home price gain slow because they've already pushed the cost on the consumer so much, and they're even mindful of it going ahead. The new home sales still have the advantage of low mortgage rates. I'd keep an eye out on housing and mortgage rates above 3.75%, something that was in my forecast for 2021. It was not in his forecast, but he said keep an eye out and watch for that.
And remember, he talks a lot about demographics and these coming of age. I think he says 31 to 34. They're going to hit that age. These, I guess, the millennials from 2022 or this year, 2021 to 2024. He goes on a lot about this in a lot of his articles, where we're going to have, the U.S. is going to have the strongest buyers market or buyers available of any country in the U.S. So where's these homes going to be available for them?
How are they? I'm interested to see where they're getting the 6.5 months of supply number. Basically,
I agree.
I want to know about the moderation in housing data since last summer, and that is what we were seeing. Supply goes over 6.5 months supply, builders will halt their growth. So we're talking about the census. According to the census report, the 3-month average is now at 5.53, which is what they're looking at. And that is in between 4.4 and 6.4. That's an okay market for builders. It's not as aggressive.
And that's why he's saying what he's saying.
Has been. Well, in our market, I know if you put a couple of 2x4s in the ground on an empty lot, it's sold. So I just don't.
So how does that equal 5.3 months of supply?
I don't feel the relief in new homes construction supply that he's inferring that the nation has. The census report says. It doesn't feel that way, and maybe that's because Little Rock has become a hot market, right?
Right.
So it doesn't feel that way. But if that's the case, if it is that way nationwide, that's interesting.
It's really interesting, and it feels like until this week, every economist was saying not enough. We're 1.4 million homes short. We're 1.7 million homes short. So we're short on on listings. We're short on inventory. We're short. Now this week, it's like, is the housing market gonna pop? Is the bubble gonna burst? It's just
one week difference. It's 1 week difference, but at the same time, on our show, we've been talking to real estate agents for 5 weeks about it, and there was you remember? I think it was the Father's Day weekend. It was just like a little slowdown. There was a little difference,
and it was a noticeable slowdown.
Yeah. And we talked about, is this the sign of more inventory hitting the market overall? And it does seem that more inventory has hit the market, but not months of relief. It doesn't feel that way locally, but maybe it is
here locally. Here locally, for me, we're still under a month's supply. We're at 0.85% of a month's supply right now. So that's up. Remember, we were at half a month and we were at 0.6, 0.65. So we're at 0.85%. So we're not at a full month supply yet. So it's up, but it's still heavily lacking.
Tom Tizak in Maui says new home is not accurate for markets that have been stifling expansion like Maui. I mean, you can only build so many homes on an island.
Well, and remember too, yeah. Well, and remember too, remember the stat last week or the week before about permits. Permits are not being pulled. So
yeah,
how is everything all of a sudden cool? Yeah, we got plenty of inventory. We're good. No, they're not pulling permits. They're not building right now. Builders are holding back. And remember, the main stat from the builder sentiment, they averaged those three
last week. Yeah.
The one last week of buyer traffic was down to like 61. That's way down.
Yeah.
So buyer traffic is down. So I want to know. I've had like 80 calls this show.
Is buyer traffic down because of the expansion, or is buyer traffic down because the price point is high and they don't want to pay it? The materials cost that they're seeing in the news. Jonathan Pyron, he says that now the lumber has spiked. What buyers now that lumber has spiked, what buyers that the buyers that signed pre-sold contracts at the higher lumber prices, then 3 to 4 months later, when they're trying to get permanent loan financing, may run into problems. Thoughts? So the issue, part of the issue with that, Jonathan, we talked a little bit about the drop in lumber prices. It did spike to $1,600, over $1,600 per 1,000 board feet. I think last week it was in the 600s, or even it was getting closer to the 400s. Dan, you want to look that up? So yes, it is.
It was at 600 last week.
We also talked about how that the savings has not been shifted to the buyers or builders yet, because the supply houses are still holding lumber that was purchased at the $1,600 mark. And so they're still going to have to sell that until they run out of that, and then start to fill with the lower price points on the lumber. We also have people that were hoarding lumber for a while, that the lumber is starting to hit the market, which is another thing that's dropping the prices. So I
582 right now.
582. Wow, we're in the five. We're getting lower and lower.
Yeah.
So the interesting part of his question, though, is not just about the prices and that those prices aren't going to be passed to the consumer. The most interesting part of his question is, what if they refi? At the end, they have their construction loan, they refi into conventional financing. Will they run into problems? The only reason, Jonathan, I don't think they're going to run into problems is because of the other home sales around them are still higher. 4 weeks ago, we talked about the how the average consumer gained $33,000 of equity, or $33,400 of equity in their home since January due to the rising home prices. And that
was in the first 6 months.
That wasn't due only to the new home construction. That was resale. So I personally don't see a problem with the refi. As they had the $20,000 extra or $30,000 extra if lumber prices go out of hand. I don't think it's going to be an issue because the other property values have also increased, but that's just my take on it.
And I know I don't want to skip ahead, but I know we have one coming up. But Rona 1.2, interest rates are down even farther again.
Yeah. I think Julie Moon was agreeing with Tom when she said that wasn't true in Georgia. We were talking about some of the things we weren't feeling there. Let's see. Building start. Adam Johnson says building starts are 3 to 4 months behind. As lumber prices go down, the new start should go back up.
Right, but 3 to 4 months. That's a long time to wait, and then you got to build the house, which is taking 6 to 8 months right now.
Julie Moon says, okay, I admit it. I paid the news guy to say the bubble is going to bust so my own buyers can get on the edge. I hope folks drop out and decide not to buy. That's good. All right. So let's get to this other news article because I got to go pretty quick. NewRona. It's like Julie Moon.
The NewRona, not classic Rona.
We're at the show prep show yesterday. And we were talking about this. I don't even want to say the word, but you can
say variant, the new variant.
Can you say variant? Okay, the variant
of the Rona.
More, and we were saying, well, we don't really want to say what it is. And Julie was like, "It's NewRona. It's just like the new Coke."
Yeah.
So rates,
not classic Rona, NewRona.
That's right. Rates are falling 2.78 to 2.78%. The average 30-year fixed rate mortgage sank 10 basis points to 2.78% for the weekend in July 22nd. Yeah, I've got to get my lenders some docs because we're totally taking advantage of this right now. Yeah. According to Sam Cutter, Freddie Mac's chief economist, concerns about the NewRona, and the recovery from the pandy are taking a toll on economic growth. They said, unfortunately, many home buyers are unable to take advantage of the low rates due to low inventory and high prices. there's really, I mean, they kind of go into a lot of what we already talked about. Even if we were to ever experience unchecked inflation over the long term, that would pose real challenges to our economy, Biden said, and it would remain vigilant about the response. So they are trying to keep rates low, but they're also keeping an eye on inflation. But that's the bulk of it. Dan, did you see anything else in that article that you wanted to highlight?
No, not really. It's just interesting when you kind of put all these things together. Again, trying to say we're going back to a normal market. And dude, we've been saying for the last 6 weeks or so, we've been saying there's been a chilling, there's been a cooling, but the news has not reflected what we have been saying. Remember, we have our finger on the pulse of the news. When news breaks, we fix it.
Melissa Marr said, Rona,
my lighting is vibrant. It's a setting on my camera.
Melissa Marr said Rona 2.05 or whatever. I think it's just a 1.2, 1.3, something like that.
Yeah, I don't know.
Matt says, where are my Loki watches? I haven't watched Loki at #variant, it says.
Yeah, once you watch it, you'll understand. But yeah, my lighting is very vibrant today. It's
we're working through Agents of S.H.I.E.L.D.
Yeah.
Okay. So
but anyway, but it's interesting to put all this together, and then all of a sudden the news during a slow news week, we'll call it, all of a sudden everything is, the same thing over and over again. Even when the data doesn't necessarily suggest it, it's interesting to watch. And it's also interesting that it irked me so much this week.
Home prices continue to break records. I mean, is this even a news story anymore? Nationally, home prices were 16.6% higher in May 2020, the highest reading the S&P CoreLogic Chase Silver's report in 30 plus years. In April, it rose 14.8%. I think that's the biggest. It's just a 30-year thing. A month ago, I described April's performance as truly extraordinary. And this month, I find myself running out of superlatives, said Craig Lazar, Managing Director, Global Head of Index Investment Strategy at S&P DJI. He said, we have previously suggested that the strength in the U.S. housing market is being driven in part by the reaction to the Rona pandy, as potential buyers move from urban apartments to suburban homes. May's data continue to be consistent with this hypothesis. What?
I don't know. There's a lot going on. I'm just laughing.
Okay.
I thought you said May's data sounded funny to me.
I'm trying to say data more instead of data because some of you commented about it. So I'm trying to be better.
No, you could say that keeps our show interesting. I say data, you say data. I say tomato, you say tomato. Well, you say couch, I say Davenport.
What? The problem is somebody looked it up and then sent it the actual pronunciation. So I have to be
okay. Well, here's the decider. How do you say GIF?
GIF. That's it. It's not a GIF. That's for sure.
Right. It's not a GIF either. The creator says it's GIF, but I don't agree with the creator. It's GIF.
Colloquial. All right. This last two quick mentions. We heard through the grapevine, I think it was Dusty that shared it in the BMORE contributors group, that if you're in Wisconsin and you're trying to sell your home for sale by owner, you can't list it on Zillow. We've not been able to verify this yet. So we need some help. If you can help us verify that, we'd appreciate it. If you're in Wisconsin, can you sell your home on Zillow or not? All right. The next thing I want to cover just real quick is Inman is being acquired by Beringer Capital. Brad Inman retains an ownership stake, and the current team will continue running the company with plans for significant growth. So they're trying to significantly grow the brand for Inman. One of the things I would suggest, so producer Matt, can you display this article up on?
This is a great suggestion Ray has, by the way.
Go down to where it has his photo there at the very top. Yep. Scroll up. Nope, not that one. That one. Yes. Yep. No. Yeah, that right there. Display that. One suggestion I have to maybe improve Inman is to clear up the owner's photo that's blurry. What in the world?
Yeah,
he runs it and they put a photo of him that's blurry. What? Like his headshot's blurry. What are they doing?
You're looking to grow the brand, and that's the photo of the guy who is the website is named after that you share.
Yeah. I mean, I know he's probably not pompous enough to even think about it. You know, he's not pretentious and going to be like, oh, that's a bad headshot. But come on, man, treat your guy right. And
well, it looks like they said, hey, send me a quick selfie. And he just took it real quick in the lobby.
I think like based on what he's wearing, I think it's more than a selfie. They just threw up a blurred photo of him. I thought that was really funny.
Yeah.
All right. So basically, they're partnering with this other company. The reason why we're mentioning it is because Inman is a news source for us. We look at their articles, we subscribe to them, we read it, and we share those with you guys. So this is just kind of a what was the show that was like, let's put a pin in it. Let's put a pin in it. Come back. We're gonna put a pin in it and just note that they sold, and then we will see what happens. But that's just kind of what we want to.
It's interesting to watch because when you see like Jeff Bezos bought, was it the Washington Post or something? All of a sudden, it was like, the Washington Post was saying we need to tax the rich. Then he bought it, and then it was like we don't need to tax the rich anymore.
Nah.
Really interesting. The shift in ownership changes how articles are written, isn't it?
D says Brad and his glasses are spectacular.
Christina, he looks relatable.
He does look relatable.
He does.
They're just mad at the boss man. Yeah, maybe they're like, I can't believe you sold out, dude. I'm just gonna throw up this.
Yeah, or they're
photo
just messing with him. Like, hey, check out this pic of Brad I got.
Matthew Clanton said the CEO's headshot is 150 pixels by 150 pixels. That's compressed too. The reality is he probably had one of the first headshots at Inman, right? And now we're looking
he's
at
employee number one, right?
Yeah. So that was his headshot from back then. This is the story. Okay?
From his old LinkedIn profile.
Yeah. That was back when it was like 720p. Okay. Right. So somebody took a photo of him with a 720p camera, and they were like, Brad, we need you to go stand by that wall. They took a picture of him. He's like, great, Brad. Every time you write an article, we're going to put that up there. I hadn't read an article in a while, but they still have it in his file under Inman headshot. So they just selected it. They didn't think that everyone's going to be looking at it on 12K screens now. So it's a little bit blurry. That's got to be it. That's got to be exactly what happened. Matt Clayton said the pic was taken with the toaster. Julie Mead said it's like a realtor lady business cards with a photo from the 90s.
Hey, isn't Adam Johnson in Wisconsin?
Adam, are you in Wisconsin? This is it. This I can't click on this. It just made everything bigger. Producer Matt, can you grab that comment off of the Facebook, click on it, and then put that in our private chat so that we can see this is exactly what we've been looking for.
It is Julie Moon. Yeah, it is. It's like realtor lady business cards with a photo from the 90s.
Breaking news. No for sale by owner in Wisconsin. Don't do it.
But
don't do it. Is that a good link? Adam, are you sending me an honest link? All right, so put that up there, Matt. Let's see this. Oh, for sale by owner. He just found a for sale by owner. So that's what I did too. I looked.
That's what I'm doing right now.
Oh wait, that's MI. That's Michigan. That's Michigan. You need WI. You got to do WI. He said that's a Michigan listing. Why don't you? I thought you were sending us good information. I thought you did. All right. So we're going to watch producer Matt do it live. Are there for sale by owned homes in Wisconsin?
Yeah, you looked yesterday, right?
Yeah, but I found them. He's not finding them. Oh, 500 other listings. Yeah, they're still there. Wisconsin. They're still there. So is this just a rumor that's going around the internet? Dusty Martin says the question is if they will allow the old ones to stay up or only new ones. Producer Matt, try to list your house on in Wisconsin on Zillow. No, don't sign in. Don't sign in publicly. Oh my goodness. All right, never mind. We'll figure this out. Julie Moon says someone call a Wisconsin broker or a realtor board office. This does show me that we need to we need to expand our audience to Wisconsin because we got no cheeseheads in here telling us. I should have said no for sale by owner in Green Bay, and then just let the Green Bay crowd interject. So, all right. Julie says someone do news work. Nico said, but I don't understand how this is legal. All right, so what's happening? I don't know. I can't see what you're searching. So what's happening, Nico, is now that Zillow is a part of the board of realtors, someone said that now they can't display because the new rule from the board of realtors, they're not able to display it. So we're not. What are you? Wisconsin home buyers.
It's all Zillow and Redfin that pops up.
Yeah, this is exactly the search that I did yesterday. I was trying to do real journalism yesterday, and this is exactly the hang up that we were running into. It's just circular information about listing your house on Zillow and such. So, all right, can I sell my house for cheese in Wisconsin? He said. Meh. All right, guys, I think that's it. Wait, we have a hand raise. Is that a Wisconsinner? Oh, it's just Adam Johnson.
A Wisconsin-er.
Michigan listing.
A Wisconsinite.
All right, guys, thanks for joining us. Dan, could you tell everybody where they can find you?
Well, this Sunday, you can find me live with Christina M. Smallhorn.
What?
Yeah, I think would you, dude, it's been enough today. My dogs are gnarly.
I was just asleep in the kennel like a good dog.
Leave it. Hey, leave it. Yeah, I think it's 3:30 Central Time, so it'll be 1:30 my time here on the West Coast, and then 4:30. Yeah, I don't really know what I've gotten myself into, but I think we just go live, and a lot of people ask us questions, real estate related and stuff. So I'm really looking forward to that.
I've been on it. It's fun.
Yeah,
it's a fun show.
So really looking forward to that. And then everywhere else here on Clubhouse, D-Ludwig DLUDWIGROCKS. And especially on Instagrams where I post most of my stuff. Ray, where can they find you?
You can find me at Ray Zorback. That's RAYZORBACK, wherever good Razorbacks are sold out. D Jones says, let's see the doggy. Let's see the doggy. We'll see the puppy. If you're watching live, this is your treat for the day. But you guys follow us on Instagram, please. Oh, there he is. There's the puppy. That's a big dog, man. He got big fast.
That's a big boy. Look at him hold on. See how he holds on?
Yeah, I like how he holds on to your arm.
He's a good boy.
Well, thank you guys for joining our show. We will see y'all next week. So, bye.
Bye. Thanks, everyone, for dealing with all of that.